Major developments with inflation right now, both negative and positive. I'm going to bring you that. I'm looking at this on a global scale. We have to understand what's happening in depth because that is going to affect you, your retirement, and everything in between. Let's begin right here. No time to waste. We're looking at the financial conditions in addition to the Fed funds rate. The red is the Fed funds rate. And you can see that financial conditions have started to, in just the recent past, have started to tighten. What are financial conditions? Basically, it's how easy or difficult it is for individuals and business to access credit. I put a full description down there in the description box if you want to look at that. But it all depends, of course, on which financial conditions index, and there's all these different things. It depends where you are around the world. I mean, there's a lot of factors there, but that pretty much summarizes it. And we can see right now that if you understand what happens with what I call the money mirror method, well, then it gives us a look at what could happen in the markets. The markets then affect what's going on with the corporations directly, and they will either hire people or lay people off or have a hiring freeze and so on. And we could see that companies have been running into a little bit of difficulty right now. This is important because it goes in line with everything I've been talking about. Keep this in mind. Let's move on. Just take a look at what's happening with inflation. They thought it would be transitory, and yet it is nothing of the sort. You can look at this information that suggests so far the market chatter is that service inflation, the price of travel, dining out, and hospitality, for example, has proven more persistent than goods inflation, largely because of an extremely tight labor market. But logistics managers are warning that the supply chain is clogging up again, which could contribute to higher prices for goods. Quote, late fees and warehouse fees are passing on to the customer, which is why we're not seeing products fall as much as they should. So there's so many things, not just the products. You've got to look at it from the warehousing of those products. Inventory had piled up, and of course that is an issue for a lot of companies. Now I've got some positive developments for you. Cheaper fertilizer then equates to cheaper food, and you're looking at the US food CPI year over year. That's the black line. We've come off the top, which is a good thing. And the fertilizer proxy year over year pushed forward 6 months. So of course, fertilizer then leads to crops later on. And with the fertilizer having come down, we can have an expectation that food prices will hopefully follow. That's great. That's fantastic. However, are the businesses going to bring them back down to where they were, let's say 2019 prices? Absolutely not. We know that to be the case. Hopefully, though, this does ease pressure. And like I said, they bring these prices down. I mean, I know you see it all the time. You go to the store and you were used to getting carrots, a bag of carrots at 99 cents. All right, it's 99 cents. And then suddenly it's 129, and then maybe it's $5 because of some sort of shortage or disruption or something else that's happening. And then the prices go back down because all that's over now. But those carrots don't go back to that 99 cents. They stay at 129, 150. Why? Well, there's different reasons. But if the consumer was willing to pay for it at $5, are they going to be willing to accept $1.29? They probably would be. And that's what happens. I notice this all the time. It's in even in the e-commerce world that I'm familiar with. If they can manage to squeeze you, even just for a period of time, it acclimates the people into accepting a newer, higher price. That's the way it goes. Look at this. Is Florida running out of orange juice? Record prices put the squeeze on consumers. My goodness, they talk about this Simply Orange, and they're saying it's $7 for a bunch of orange juice. And this is something that is just one commodity beyond, so many, but it is a popular commodity that people trade. And among other things, there's possible factors including disruptions because of hurricanes, and then the crop had a problem and so on. All these things add up, but when you do that, you add up, you have to understand there's speculation going on behind that. Either way, this is just one crop of many. I'm trying to highlight the fact that you could have a disruption from an event that occurs, and suddenly the prices become too high for people to afford. Then we have this. There's a new inflation warning for consumers coming from the supply chain. Warehouses and distribution centers are pushing rates higher with US storage prices up 1.4% month over month and nearly 11% year over year. They talk about the inventory glut as well. This is important. I talked about this before, but I can tell you personally that the prices for Amazon's warehousing has become very expensive, okay? And they're doing this for many reasons. They want to get their profit, obviously, but at the same time, they're experiencing problems themselves. So this is something that for most people, they don't understand what happens behind the scenes, but those will translate, absolutely will translate into higher prices for the customer. And that means less money that they can spend elsewhere. So we have to look at the GDP stats. The reason I mention this, you look at GDP stats. Okay, this is how much the economy is because they're spending this much money on this and that. But when you break it down, did they buy more stuff or did they pay more for the exact same or even less stuff? That's the trick. That's how they get you. It's just like the introduction of Obamacare. They brought in Obamacare and the GDP immediately was soaring. Was it because the economy was so fantastic and all this? No, it's because people had to spend much more money suddenly. So watch the tricks that they do. Very important. Here we have it. Looking at $500 a month, no strings. Chicago experiment with guaranteed income. For recipients, it's a lifeline. For liberal supporters, it shows how expanding governments can make a difference. For conservatives, it's a return to wasteful welfare handouts. And my friends, I would ask you, put your comments below what your opinion is with universal basic income. Some say that this is going to be necessary at some point because of all this AI, robotics, automation, getting rid of the jobs. The only solution is to take money from I don't know where and give it out to the people that need it. This is something that has been talked about for a while. They've started some pilot projects. This happens to be one of them. And so we'll see. But I'm interested. Put it in the comments below. Let's discuss that. Looking at the next one, you could see we are still, this is, by the way, Bowman from the Federal Reserve Governor. We're still far away from achieving price stability, and I expect that it will be necessary to further tighten the monetary policy to bring inflation down towards our goal, while there are costs and risks to tightening monetary policy to lower inflation. I see that the costs and risks of allowing inflation to persist as far greater, which is something that they've been talking about a lot. And we know this to be the hawkish, supposedly hawkish details that for a lot of this period they've been ignoring. The market ignored. Now we're starting to hear much more about it, and it is the driving force for why there's a little bit of fear and hesitation for the market to head higher from this point. In a tight labor market, some states look to another type of worker, children. Well, what they want to do is basically allow younger children, 16, 17 years old, to be able to work to fill in the gaps for those places that they can't get enough workers. And they make the mention of here like certain dangerous conditions and everything. Somebody that's 16 years old may not be appropriate and so on. I think that, in some cases, there are certain 16-year-olds that are much more well suited to be in that position than an 18-year-old, let's say. It just depends on the person. But what it does highlight for us is that these instances, we've got something going on that's just wild in the markets. We've never seen this in the job markets. We've never seen it. You look at people that have been working for all these years, they can't exit the job market. They're 65, they're 67, they're 70. They can't exit the market. They need to keep working to pay the bills. And then you've got others that are so disgruntled, they've left entirely and they don't end up on the statistics anymore. And then you just go in deeper and deeper and everything is out of whack. Nothing really makes sense anymore. So that's the way I see this, that you look at the data, whether it's the U3 unemployment rate, wow, 3.4%, everything must be fantastic. There's a lot more to it. It's really messed up today, and it shows you how weak the economy actually is. You've got food stamps, 40 plus million people on food stamps. They're allowing Medicare to be spent on food now. It shows us that there's something else going on here. And when you pile up all of this debt on top, it can create an absolute crisis, which could start with the credit card companies and the payday loans, and then start to unravel the whole financial system and bring it down. That's not happening right now today, but we do see those early warning signs. And that's why I bring them to you here. US to sell 26 million more barrels from the strategic oil reserve. This has supposedly created a little bit of a positive effect on the price of oil. If it gets too high, hey, it's $80 a barrel. Let's release more from the strategic petroleum reserve. But as you can see, they're going back to levels that was back in the 80s. That's a big concern, of course. You probably don't want to see that for obvious reasons, right? You have this for a reason. At the same time, they're telling oil and gas companies are saying, we're going to bankrupt you, don't open this, don't do that, and you're going to be punished if you do. So long term, that could actually be a security risk. This is Japan. Japan's inflation rate is at a 4-decade high. Wages are picking up, and yet the governor is doggedly sticking to his crisis era policy settings, and arguably they're needed to ensure price gains are sustainable. Oh yes. Well, apparently the new governor's coming in, and you know what kind of policies he's going to have? The exact same ones. What they're showing you here is basically the amount of bonds that Bank of Japan has been buying. There's only two people or two groups left in Japan right now. It is the Bank of Japan, the Central Bank of Japan, and the Pension Fund of Japan. That's it. Everybody else is gone. It's a ghost town. Nobody wants to buy Japan's debt. Why? There's nothing left there. It's a very, very odd scenario where they will not admit defeat. Perhaps culturally this is an issue, but regardless, at some point you gotta come, just admit it. British semiconductor bosses threaten to move overseas as US and EU splurge on chips. They are spending, EU and the US are starting to at least agree to spend some money on their own semiconductors. In the UK, they hope that this will be the same thing. They don't want that reliance on Taiwan. They don't want the reliance on China more specifically. Looking at this, Turkish-Syria reconstruction costs to come into the billions of dollars, according to the World Bank. This is potentially going to affect you no matter where you are, UK, US, and so on, because the potential for US money to be sent there, UK money to be sent there, either directly or indirectly through the IMF, through the World Bank, through these other institutions. At the same time, I am interested to see who gets the contracts. Whoever gets the contracts here is going to benefit. As an investor, you stayed this long into the video, look at who gets the contracts. Their stocks might pop. Amazon's Zoox robotaxi now giving rides to employees on public roads in California. I looked at it. Interesting, but the reason I mention this is it's extremely disruptive, and I'm not using that word in a Cathie Wood sense. This is really disruptive because they're going ahead with autonomous whether we like it or not. They're doing so. This is going to replace the drivers. This is going to get rid of the taxi drivers, the Uber drivers. This is going to get rid of the bus drivers, all of these different types of vehicles that are, transporting goods. That's the future of this. So I see a difference in, let's say, the young children that are just born right now. They probably will not have a car. It's not going to be like the old days where you go cruising. You basically right now are seeing the last generation that most likely will own a vehicle. And at some point they'll probably ban people from owning it regardless, but at least people won't even desire it. The younger generation probably won't desire it. They say, look, I'm going to hit 2 buttons on my phone and that car will arrive, and why do I need the responsibility? So that's the way it's looking. This it for this video. It's inflation, it's the economy. We're talking about this, and I hope that you took a couple points from it. If you want to know more, if you have any details that you need to know, just put it in the comments. I always try to reply to any comments that I can. I'm always paying attention to it. And then I'll see you tomorrow. Take care.